Welcome everyone. I'm going to show you some dramatic differences between real estate investing and stock investing. Can I share with you my purpose, my why for creating this video series? I want to show you how to retire early with less money invested and to be able to live on the income from your investments so you can retire when you want and the way you want. And to prevent the heartbreak of outliving your savings in retirement, especially when you need it the most. If you're watching this, we're about to unlock something big that'll have you questioning the way you're saving and investing for retirement. We're diving into a game-changing idea that could reshape your financial future. If you've been told the stock market is your only path to retirement, think again. Real estate offers a safer, more predictable way, and it is a strategy most people never hear about. In this video, you'll discover insights few financial advisors will ever share, and a smarter, easier path to building lasting wealth. Over the last 125 years, real estate investing has quietly outperformed the stock market, and it does so with more predictability, more control, and greater peace of mind. You'll discover how real estate can do more than give you a place to live. It can help you build real, lasting wealth and a secure financial future. Hi, I'm Jeff Seibel, and welcome to Intro to Real Estate Investing versus Stock Investing. We'll break down a few key differences between stock investing and investing in real estate. Are you ready for a mindset shift on how to save and invest for the future? Whether you're planning for yourself or guiding others as a real estate professional, this could change everything. If you haven't seen my other videos, I'd like to tell you a little bit about myself. I'm a certified financial planner, real estate broker with over 40 years of financial planning and real estate investment experience, and I'm the creator of the Wealth Agent Certification Program. Now let's look at how real estate has predictably increased for the last 80 years. This is an illustration that shows the historical increases of U.S. home values by decade beginning in 1940 to 2020. When I see just one house or investment property, I see tremendous wealth building opportunity, and so will you. When you look at the middle column here in yellow, you can see the increases in values of the median U.S. home by decade from 1940 to 2020. Do you see the prices have increased from $2,938 in 1940 to $329,000 by 2020? Please notice that in most decades, real estate has predictably increased by 4 to 5% and sometimes much more. This is a huge deal from a wealth building and retirement planning perspective. All of these compound growth rates are very good, but when you add strategic leverage or a mortgage, all of these returns become amazing for real estate investors. Key point: real estate values and rental incomes have predictably increased over the last 80 plus years. Now let's look at how the stock market has performed for the last 120 years. The stock market is unpredictable. No one knows what the stock market will do in a day, week, month, year, let alone 25 years from now. Throughout history, bad stock market periods, underfunded retirement accounts, inflation, and shrinking purchasing power have left many people wondering if they'll ever be able to retire at all. Do you see in red that there were 7 out of 12 decades with bad stock market periods and only 4 good periods with returns of more than 10%. When you look at the last 120 years, you can see before and after every good stock market period, there's a bad stock market period throughout history. I call this the seesaw effect. Key point: before and after every good stock market period, there is a bad stock market period. These declining, flat, and bad stock market periods are devastating to stock investors because they don't receive the returns that they were expecting. This forces them to delay retirement or possibly not retire at all. And if they did retire, many of them, with stock accounts too small to last, went broke or outlived their savings in retirement. This is what happened to stock investors that retired in 2000 and tried to live on their stock portfolio. After the greatest bull market in history, they went broke in about 14 years. Now I need to talk about why most stock investors investors fail when saving for retirement. If you would like a copy of my free booklet entitled The 10 Main Reasons Why Most Stock Investors Fail When Saving for Retirement, please click the link below. Let's take a look at an illustration of the Dow Jones Industrial Average from 2000 to 2025. It looks very impressive, like a missile shooting up in the sky. The stock market has done very well since 2009, but how well has stock investors really done compared to real estate investors? What do you think? How well did stock investors do compared to real estate investors for this 25-year period from 2000 to 2025? Dramatically better? Much better? About the same? Dramatically worse? From 2000 to about 2012, the stock market did not increase for about 12 years because it went down, then up, then down, then up again. Here are the actual returns of the stock market for 11 different 25-year periods since 1900. Because of the bad stock market periods, it's common for stock investors to receive returns of less than 5.5% and rarely more than 8%. You may see low historic returns. I see generations of stock investors failing to be able to retire, and if they did retire, they run the very real risk of outliving their money when they need it the most. So let's talk about one of the many reasons why real estate investors have a huge advantage over stock investors when planning for retirement. Key point: strategic leverage dramatically increases the amount of real estate you can purchase and the return you receive on your investment. If you own a home, you are a real estate investor already. You understand leverage. It's putting a small amount down or a mortgage on a larger amount of real estate, which gives real estate investors a huge advantage. Here's a wonderful example of leverage with a 20% down payment of $24,000 on a median home value in 2000 of approximately $120,000. This is a 5-to-1 leverage ratio. So how do you think real estate investors did from 2000 to 2025? In 2000, the median priced home was worth about $120,000. A 20% down payment of $24,000 controlled $120,000 worth of real estate, which increased to about $420,000 after 25 years. Do you see how the increase was on the amount of real estate owned and not on the amount invested? Key point: for real estate investors, the increase is on the amount of real estate owned and not on the amount invested. For stock investors, there is no leverage. Stock investors cannot safely leverage a stock account. Here, both real estate and the stock market increased by over 5% for this 25-year period. But because real estate investors can put a small amount down on a large amount of real estate, and the increase is on the amount of real estate owned and not on the amount invested, real estate investors did dramatically better than stock investors. Both investors had an initial investment of $24,000. Unfortunately for stock investors, $24,000 only increased to $89,000 in change because their increase was only on the amount invested. It is true that real estate investors have costs, fees, and expenses and responsibilities that stock investors do not have, which we will address in other videos. Key point: for stock investors, the increase is only on the amount invested. What if you bought 4 rental properties in 2000 for $500,000? Let's assume in 2000 you purchased $500,000 worth of real estate and put $100,000 down as a deposit instead of putting that $100,000 in the stock market. How better off would you have been? The illustration on the right looks like stock investors did very well during this period, but not compared to real estate investors. When you look at the illustration on the left, you can see how much better the real estate investors did with the same initial investment of $100,000 because $100,000 controls a larger amount of real estate. And the stock investors' $100,000 only increased to $373,000 and change. This is why I created this video series, to show you how to retire or potentially retire with less money invested, to give you more control over your retirement plan and hopefully prevent you from outliving your money when you need it the most. It is quite painful coming to the realization that you cannot afford to retire. Some people might say, well, I'll just keep working. But there are many unknowns in life. As people get older, and circumstances often change. Imagine needing to downsize your life and your lifestyle. Retirement takes planning. Not having enough saved for retirement could be devastating. How do you want to spend your retirement? If you're a real estate agent ready to level up your business, boost your income, and stand out as a true professional, it's time to become a certified wealth agent. Take our certified wealth agent training and get your new designation at wealthagent.com and become part of a movement of elite professionals showing clients how to retire early with less money invested. Don't just sell real estate, transform lives and dominate your market. If you would like to find out how to retire early with less money invested through real estate, or would like a second opinion on your current retirement plan, we're here to help. Visit wealthagent.com to schedule your complimentary consultation today. Dream bigger, retire sooner. Your new path begins now. Please go to wealthagent.com to learn more. And thank you for watching. I'll see you in the next video.